traders from across the globe. Welcome to my 2737th edition of Short-Term Trading Live with Oscar Carboni. Traders, thank you for tuning in. We love you guys. We love the participation. Thank you so much for watching these videos and commenting every day. Trading is risky. This is all about trading. It's a risky game. Stocks, commodities, ETFs, I don't care what it is you trade. Crypto, it's risky, risky, risky. What do we do to mitigate that risk? We put our stops in first before we begin to trade. If you do that, you have mitigated your risk and you'll live a lot longer in this game. Make sure you put your stops in first. What the heck's going on out there? For April 17, 2024, we've got a red Omni, continuing red Omni on the board. What is that about? Number one on the board, the stock market continues to correct or adjust lower. You've seen the webinars, you've seen the proof. I've shown this to you before it happened. I came out in the beginning of this month with a video to say, that's it, we're now getting bearish. It was exactly on time. Within one night of that video, the markets have been getting bearish since. We are correcting lower. Why? Well, two of the simplest reasons, there's 50. Two of the simplest reasons to see are bonds moving too low and crude oil moving too high, putting a lot of weight on the stock market. A lot of people don't understand what that means. If you've got a product that you're trying to make, that product, you can get the supplies these days cheap because there's no supply problem, right? The inflation's on supplies. You can get the supplies cheaply, you can build it, but then you've got to move it somewhere. Those supplies have to be moved to you. You're using some form of energy, most likely gasoline. There's only 5 to 7% of the world on EV, so you're using gasoline, right? Or crude oil. That's getting more expensive. To move that product that you made somewhere else, it costs more. There's inflation because of the price of that product because of crude, number one. Number two, you've got the bond market moving lower. That makes rates go up automatically without Jerome Powell, without help from anybody. The rates automatically go up when bond futures go down. Why would that be detrimental to companies? Well, if you are a company that issues corporate bonds, you sell corporate bonds to bring in money to run your day-to-day operations and you pay back the interest on those bonds. Well, if the interest rate that the government offers is starting to move up, that means the interest that you have to offer as a company is greater than that. Why? Well, why would you bother borrowing from a company, which is risky, when you can borrow from the government in bonds, which is not? So the companies have to pay more, and if the rates have moved, they got to pay more next month than they just paid this month for money. That means their stock has to adjust lower. There's not an if. It has to do that. Now, I explained this to traders before it happened. I explained it to you in a video. Then I explained it to all of you again in a live webinar. And it is what's happening. The market is adjusting. It's not crashing. It's at the beginning of the end. We have to make an adjustment. The entire market is like a big puzzle, every single sector. And when some sectors of that puzzle move out of form, the rest of the puzzle pieces have to catch up to it in order to keep the puzzle together. That's the way this works. It's one big symphony, if you will, or it's a big puzzle. So some of the pieces have moved, other pieces have to move, and I am telling you what that is. It's an adjustment lower in the stock market. It started the very next day after I told you it was coming. It is absolutely happening. Number one on the board. Number two, with this, the Omni or the OTAPMA, the Omni Trading Academy's proprietary moving average, is getting breached in many of our U.S. indices. You haven't heard me talk about OTAPMA in over a year or two because it's been out of the market. Suddenly the markets are coming lower, OTAPMA is showing up, and it's getting breached. I'll show you the charts. With that in mind, I'm going to ask you a question in this video during the chart segment. I want you to answer if it's A or B, and the question will be this. Will NASDAQ and E-mini S&P on the daily bar charts, will they hold OTAPMA, the Omni Trading Academy's proprietary moving average, or will they breach it? A, if you think it'll hold. B, if you think it'll breach, but don't answer yet. You got to see the charts. During the chart segment, you'll understand it, but you'll be answering A or B. Let me show you the evidence first, and we'll go from there. Then 4 on the board, T-bonds and crude oil are creating havoc in the stock market. They are. I'll show you the charts. It's absolute. Bitcoin, we are still on the sidelines in Bitcoin. I'm clapping just a little because we hate when it goes down. We're still on the sidelines. We're doing nothing but holding our Bitcoin for the target of 85,000 when it gets there at our projected date. So a lot of stuff on the boards, kid. The stock market continues to adjust, not break down, adjust lower. My Omni Trading Academy's average is getting breached like crazy. The question tonight is, will it hold in E-mini, S&P, and NASDAQ? I'll show you why I'm asking that question during the chart segment. I'll show you why bonds and certainly the price of crude, which I explained already, is wreaking havoc on the stock market. And I've got great charts to show you what I'm going to get to right now. But before I get there, Omni campers, hey, you guys are ready, right? We're getting together in, 9 days now? In 9 days, you will be here in Vegas. I'm so excited to teach you guys. You're going to get an email from me in the next few days with some software. Make sure you download it, blah, blah, blah. Call me if you need me. It's simple. You'll be ready for Omni Camp in no time. If anybody else wants to come out to my April Omni Camp, you got very limited time. You better call me right now, 702-629-4755. If you'd like to join the other 3 traders, I'm going to personally train here for 5 nights and 4 days in Vegas. I'm going to teach them my system. If you want to be part of that, it's the 25th of this month. You've got to call me right away so I can make arrangements for me. The only other thing I'm doing about camp, there's only 2 camps posted for this year. The next one is June 1st, and it's in Naples, Florida. Anybody down that side of the world, if you will. If you're anywhere near Florida, come join me in Naples for June 1st. Go to omnibootcamp.com and fill out an application for that. All right, so I can't wait to show you the charts. They look fantastic. I think the markets will continue to move lower. You got to sell rallies. With no further ado, I want to take you to that chart segment and show you what you should be looking at. And remember to keep your emotions out of trading, right? Always keep them out of trading. How do we do that? Well, we say this to ourselves over and over again. You're going to say it with me because by now you should know what that is. Say it with me, kids. Are you ready? 1, 2, 3. Stop, soar, in. Emotions are rock and roll, kids. Now let's go. Look at some charts.
This isn't a gimmick. It's not a product. It's a life skill. And teaching people life skills, that's what I did as a Scoutmaster. That's one of these things that Oscar does for us.
So if you're going to put your money in anyone's hands, it's like putting your money in like a doctor's hands. Would you want to bet on the doctor or would you want to bet on the student? He's a doctor.
Traders, the Dow Jones Industrial Average Daily Bar Chart. If you remember, right about here, we gave you that video and said that this thing was now going to go into a tailspin. It has done exactly that. It broke through the bottom of this channel, and you've all seen these charts before. You've seen them in the webinars and the videos. Well, we're in a new channel, as you can see clearly, but here's the big thing. It broke OTAPMA, the Omni Trading Academy's proprietary. Broken. It's all the way down here. The average is up there. Breached. Okay, we said we expected a pullback on that day. Sure are getting it, but that's not all the info. Let me show you another. Russell 2000, same sort of action, was in a wonderful channel moving up. The green one breaks down right here, right? Starts to test it, finally breaks down. Look at OTAPMA. Look at where the Russell is right now. It's even lower than the channel. So Russell broke OTAPMA. The chart before that, the Dow broke OTAPMA. Transportation average fell through OTAPMA. It's all the way here. Pretty scary, right? It's also through this trend line, which was a huge apex. And moving lower, we've got a red Omni for trading on Wednesday. The mini Dow, the YM, OTAPMA's up here. The mini Dow is down here. Omni breached. Now we've got a question. What do you think will happen with NASDAQ? If you think NASDAQ will hold, please answer right now A below. If you think NASDAQ will break that and continue lower, please answer B. A, hold. A, it'll hold. B, it will break. What do you think will happen? A, hold, B, break. Please answer below right now. I'm going to tally them up and we'll see what you guys think, but there's a little bit more evidence. E-mini S&P. Not at Otapma yet, but the same thing. If you remember, the highs were put in 53.33.5. The very next day, we put out a video to say that that's it. It is time to start heading lower. Bearish conditions now ensue. We have dropped lower than this channel, and we're approaching the Omni. What do you think? Will it hold? NASDAQ and S&P, it's the same answer. If you think NASDAQ's going to hold, you think S&P's going to hold. Tell me what you think, A or B. A holds, B breaches. I can't wait to see your answers. I'm looking forward to it, but there's more information. Watch. There's more. What is making these markets crack? Well, I showed you before we actually got there that crude was starting to go into some sort of a building steam phase, if you will. And then it went into acceleration mode. If you ask me, you're looking at a bull flag here. I think it's going to go higher. And you're inside of a channel moving up, right? You were moving this way while it was building steam. Now you're moving this way. It's in acceleration mode. The high price of crude means everything that has to be moved from a factory to a store for you to go get it, everything in between, uses petrol in some way. That's bad for the market. 30-year bonds. Now, if you don't know how this works, I promise you that if bonds are going down, interest rates are going up. If you've ever been to a park where you see a seesaw or a teeter-totter, if you've ever seen one really heavy kid on one side and a light kid on the other, the light kid goes up, the heavy kid goes down. Well, that's exactly the inherent relationship between T-bond futures and interest rates. If they go down, interest rates automatically go up without Jerome Powell saying a word. You've got interest rates going up, bad for the price of stocks. You got crude going up, bad for the price of stocks. Remember, when bonds go down, interest rates go up, right? It's the opposite of bonds. You've got crude going up, and when crude goes up, it goes up. There is no opposite of that one. This is bad for the market. Between crude up and bonds down, the stock market has to adjust. You were told that on 4/2/24, and it has happened ever since. So that's a lot of the evidence I wanted to show you. You let me know what you think. Are we going to hold or are we going to break? Now we're at Bitcoin. Now we're going to clap very quietly for this because we like when Bitcoin goes up, not down. We've told you that we've been on the sidelines ever since here. We're still on the sidelines now. I own Bitcoin waiting for my 85,000 target, but that's got nothing to do with today. Today we're on the sidelines if you're day trading. And then there's the Japanese yen. One of my ex-fans on Twitter had asked me about the yen. I showed it to him the next day in a video. Then I put it and debuted it in my webinar last weekend. And I think he wanted to buy the yen down here. And I said, sir, I'm going to teach you a technique. It's called knock, knock. You cannot have a market knocking this many times on a door without it opening. That's the way it works in this business. So I showed him this chart. And this is what ensued. Look at that. That's what happened. Now, if you think that's small, these are weekly bars. This is the same exact chart, but the daily version of it. Look at the size of that drop. This thing has been getting destroyed. Just destroyed. So knock, knock worked. Another technique that you guys can make sure you use for yourselves. Then there's this. EV fans, Tesla fans, sorry, I love Elon Musk. You guys know that. You know I love his inventions, but the world is what it is. And right on this day in January, we gave out specific targets that Tesla was going to get to in a live webinar. Those targets were issued. They were 212, 200, 192. We were here. 212 hit. 200 hit. 192 hit. I issued 3 targets after that. 173 hit. Next target, 164 hit. Next target is 151. It got down to here. 151 is here. We are going to take out the 151. Once we do that, I will recalculate for you. But how about a round of applause for a bunch of great Omni calls right before your eyes in January. This was put in front of you and reiterated in every single live webinar. Rock and roll. Long live the Omni.